morning once again to all of you. And since I've just started the recording, those who are watching this webinar on a recording, please keep in mind that you must sit through. You just don't open the recording and you view for 5 minutes or 2 minutes and you switch it off. You sit through with discipline, and then you will receive the benefits of this webinar by the knowledge you're going to get. Okay, that is point number one. Those who are watching it and want to rewatch it again, the recording will be available, and then it is going to be you can watch it again if you like. Okay, and you can share it with your friends also. The recording will be available till only tomorrow night. Okay, I have seen that some people are having some questions, so during the webinar time and again I will take up some questions. If I am in the middle of speaking something, then I will not take that question right now. I'll take it up later. So wait patiently, but I'm sure to take all questions. And in the end, we're going to have a detailed question and answer session also. Okay. Right. Now, how many over here are attending a webinar with me for the first time? Can you raise your hands? There's a button there to raise your hands. I see a lot of new faces, new names. Okay, great. Great to see this, and also lovely to see the regular names I can kind of recollect, and many of my students also are there. So very good morning to all of you. Okay. So starting with, I'm going to switch off the camera and focus only on the presentation at the moment. Yeah. So as I said, the lights are not proper today, even though I've switched all lights on. The angle is worrisome. Our topic for today is going to be trading psychology. Trading psychology is a topic which is sort of not really getting that sort of recognition as it should. Many people don't realize this at their earlier stages because they're in some sort of a dreamland. How important it is for them to control their mind, emotions, and understand the psychology. Okay. In order to do that, the three branches of trading, or three pillars on which trading stands, or the three factors that are required for you to trade successfully, always jot down these three different pillars as strategy, money management, and psychology. And I remind you once again that without any of this in place, if even one of this is not in place, no matter how good your strategy is or how good your money management is, and especially if your psychology is not in place, nothing is possible. Nothing is possible. If you feel that you have money in your account and you are entitled to make money in the markets because you have made money otherwise in your life, don't think like that. You're not entitled to make any money unless you do the work. And we are talking about doing work for consistent income. Nothing which I tell over here stands for a short-term one-time gain. एक बार आपको प्रॉफिट हो सकता है, बट आपको अगर कंसिस्टेंटली कमाना है और रियल में इसमें से रिलायबल इनकम निकालनी है इस बिजनेस में से, so you need to have these three things in place. Okay, strategy, money management, and psychology. So because these are the basic premise of trading, let's understand this. They're the basic premise of trading. There are certain things which depend on us. There are certain things which depend on the market. Okay, everybody with me till now? Raise your hands. Everybody comfortable? I'm audible. No issues. No technical glitch. Nothing. You can just raise your hand if everything is comfortable. Oh, good. Good. Putting the hands down. Right. The strategy obviously depends on the market. The strategy depends on the market. We cannot let a strategy say, we can't say ki this pattern will be formed at this point. There are many people who come to me and say, sir, double bottom form ho gaya hai. Because there's a very small support which is taken at a previous low, they think that it is a double bottom. No. You have to first understand what your strategy is and let the market show you that, okay, fine, This is the point of confirmation, and this is how a certain pattern is formed, be it candlestick, regular classical patterns, some sort of divergence, or whatever it is. Okay. It should fall under your objective arena. So if your mind has got a certain periphery, a certain boundary in which all the objective ideas come, you have to find that the strategy is falling in this objective periphery. The market movement, you may miss a movement small here and there, but overall, in suppose 1,000 point movement on Nifty, if you are able to catch 850 points or 750 points also, you've done a good job, right? Then understanding risk to reward is a part of the strategy as well. Understanding probability is. We'll come to these points later. With money management also, quickly, we understand what money management is. I'm just going for the meaning, not going deep into the explanation. The focus of today's webinar is on trading psychology. First thing about money management is the position sizing discipline. Okay. The second is how to scale out profits. So if you have a trade, you're getting existing profits on the position, should you scale out all the profits or should you scale out part by part? Number 3 is booking losses, which is quite obvious, which is the most important thing to learn before you start to trade professionally. Is if you get a loss, are you cold and heartless enough to just book the loss and move on? Okay. Now, booking profits or scaling up profits we have spoken about, and trailing stop losses also. When a market is trending in your direction, you don't put the stop loss at the original stop loss level. If it is significantly in your direction, you don't let the profit go. At least you put the stop loss or trail it at cost. Okay. So these are the points. But the most important of all, what is required for you to actually play out all of this? That is trading psychology. So you may say, sir, trailing to कर लिया, but stop loss hit हो गया. अगर मैंने trailing stop loss किया और stop loss hit हो गया, I have to examine what was the basis of my stop loss. Number 2, profit book कर लिया लेकिन market और चला गया. How do you neutralize this sort of fear that the market is going to move in your direction after you book profits? The fear of missing out, or the greed, I want more, I want more, I want more. How do you neutralize these mindsets? How do you keep your mind in a place which is very, very equanimous, very, very relaxed, and has complete clarity of thought, goes in the moment, focusing on what trade is to be taken, what the market is doing, and when nothing is supposed to be done, nothing at all is supposed to be done. Having the patience to wait for those times where the markets make movements almost as good as obvious. This is our focus for today, the trading psychology. Having patience is one of the most deeper wisdom virtues. It is not easy to have patience. Everybody does not know what really patience means, right? Patience means to actually let go of you pushing the markets to do something and going and doing something by yourself. You know, the only thing which I believe is key in training psychology is develop your mind and develop and evolve yourself at a level where when your patience becomes immense. Because you need patience before the trade is formed. You need patience during the trade is running. Also, you need patience with yourself after a trading day. Once the trading day is over, or once the trade is over, you cannot have the hangover of a loss or a profit on your head. There are many people who get a profit and then they get very excited and exuberant, to some extent acknowledging that, okay, fine, I've done a good job, I'll give a pat myself on the back. That can be still given leeway. But when that excitement comes in, it is bound to turn and become its opposite, and that is misery. So this total excitement, misery, excitement, misery, excitement, misery needs to be neutralized. We need to stop somewhere. We need to reflect. We need to be patient. we need to cultivate patience. How many over here really are willing to cultivate patience, really are willing to do anything to turn their psychology around with the markets? See, that 99% of the traders, you can raise your hands, those who are really willing to do anything to turn around their life with markets. And I'm not coming from a place where I will tell you this is 1:100 risk reward trade, or this is the option you buy and you sell it at 50 times the price. I'm not going to tell you all that. I talk practical things, I teach practical things. I don't believe in selling people by stimulating them or things like that. Okay, we are going to only focus on this subject today because this is an ocean of knowledge, and throughout I have done chartered market technician, which is the elite course in technical analysis from MTA in USA. Then I have also done 2 levels of the chartered financial analyst course, which is also a very well known market professional course, professional degree in markets basically. So learning from these sources and hundreds of other books, the only thing which I have realized is that true knowledge is the knowledge of self. And that's the most precious thing I have got from anywhere. Because everything in the world will keep changing. There will be different neo-cyclical shifts in economies. There will be different parameters of the market structure which will change. The rules of the market will change. Everything will change. The only thing which you have with you is not being resistant to this change. Most of the cause of stress and anxiety comes from some sort of resistance to change. I have faced it, you have faced it, everybody has faced it. But if we understand ourselves, if we focus on the psychology, and we really get that true knowledge, the real knowledge, and move on towards the markets and towards any endeavor that we do with a more stable and equanimous approach, we are bound to get success sooner or later. It is a matter of persistence. 99% people lose money in the market. The 1% are persistent. It might sound funny. It might sound at stages that, oh my God, these people who make money may have some sort of a God gift. No, it comes out of persistence. And that persistence comes from practice. We'll come into those things later. So basically, what is the difference between a professional trader and a newbie trader? A newbie trader is busy trading randomly. छोटा मोटा प्रॉफिट का एडिक्शन, छोटा मोटी चीजें करना और उसके पीछे. So I was having a word with somebody a few days back. Two people such, both of them told me that they saw I had posted something regarding bearishness in market somewhere, and then what they did was they went and shorted calls. I'm like, okay, fine. So the market went down. Yes, sir, market went down, but there was a sharp pullback. Said that sharp pullback was at the end of the day. He said, yes, sir. But the problem is that I had shorted at the end of the day. He said, you are shorting a falling market, it's good. But you're shorting a falling market after you've fallen down so much, there's a problem. Most people are trading randomly. In instruments like options, they think that any momentum anywhere will make them quick money. Especially with brokers like the discount brokers, the brokerage is very less. When I started trading, I paid about 100 rupees per lot on an option trade. Now you can not pay 100 rupees, less than 100 rupees, you can trade 20 lots also. So the issue is that randomness is increasing if people have these kind of habits. Or even the same thing can be done in cash also. Okay, the randomness increases. I'm not saying you book 500 rupee loss or a small profit in a trailing stop loss. But what do you intend to do? If you can intend to become enthusiastic with very small profits, it will be a problem. On the other hand, being too random and seeing that every trade will become a big profit is also a problem. Okay. Our goal is going to be to move from this arena of trading randomly and shift to this arena of trading systematically. It is as simple as that. From trading randomly to trading systematically. And if we are able to do that to some extent, understand this to some extent, by the end of this webinar, I will feel that this webinar has been a success. And I get behind something, I get behind it in order to make it a success. Okay. Personally, even on weekends, I wake up early in the morning. And if my goal on the weekend is not to trade but to teach people, then I focus on that with the similar kind of sheer persistence which caused me to do trading also. See, after a lot of technical analysis understanding, the one thing which I realize is that of course the strategy is very, very important. The strategy comes about through this subject. So our first part is going to be understanding the approach to this subject, the subject of learning to read prices, the subject of technical analysis. Okay. Now, in this subject, the core essence is always hidden in the mass behavior. If there is, these masses are there, and these masses are made of people like you and me, the market participants, and their behavior. Whenever this behavior is playing out, most people tend to do the same things together. So you will see that once a year, twice a year, everybody is saying mutual fund le lo, mutual fund le lo. Or once in a year, somebody may be saying mutual funds have बेच दो, कुछ नहीं रखा है stock market में, everything is bad, it's a bearish market. These extremes tend to come about, and a lot of people are doing the same thing at the same time. You will not make, you will make money in the long term if you invest, but you will not make any short term or medium term money if you invest at highs. We all know that. Or you do the same thing when everybody else is doing. Now there's a problem with that, you see. The problem is that the market is dominated by leaders or by the people who have the power to push the market. I'm not saying that when you trade, you have to think that an operator or a leader is going to make a fool out of you, because those operators and leaders, or in most cases, don't trade on intraday basis, and nobody is interested in taking away 10,000 rupees from you. They're interested in buying and pushing the higher prices higher on stocks they're interested in, and vice versa for the stocks they want to exit. And what technical strategies help us understand is to understand where the footprints are. Just like you have a CID, which serial used to come CID, a lot of people can connect, or in AX, and there is a serial called CSI. They are these detectives who are doing this work, trying to find out that where is the thief or where is the criminal. Likewise, we have these detectives who are doing the work, trying to find out where is the criminal and also what the next move is going to be by the criminal. So once the strategies are in place, we realize that okay, this is the essence, and this is where, and I'll show you examples. This is where the bigger hands are doing such and such thing. Okay. The goal with strategies are very simple. There's nothing, no rocket science around it. The goal is very simple. That there is an idea which can be reliable on the basis of technical analysis. There's a proper execution of this idea, and obviously some ideas will have their stop losses, no problem. But in the end, consistent or net profits is the goal. So if you have an idea, what needs to be done is it needs to be executed properly, because without the execution, there will not be any net profits. Execution is key. Trading is execution, right? It is not fantasy thinking. It is not extreme views of the market. It is not sharing your miseries of greed or your thoughts and feelings with other people around markets. Trading is execution. And to be able to understand how this execution works, you need to understand how the psychology works. Now, given the circumstances around the markets, around the strategy, there are two or three simple kind of approaches to trading one takes. One is the breakout approach. Okay. Okay, so this is a, and this particular thing I also posted in some of my social media, and those are all for educational purposes. There is a breakout on the chart of Dr. Reddy. There's a proper throwback, and the price is going up again. Right? Oh, is this the chart of Dr. Reddy or which stock? I think it is Dr. Reddy. Yeah, and the price is going up again. Okay, you see that there are volume spikes. So if I zoom out from here, you will see that over here the price is showing volume. That means there's an increased participation after a phase of decreased participation. This is called a breakout. And once this breakout has happened, often there is something called a throwback, which is this second touch from here to here. This is called a throwback. Again, there's an increased participation from this throwback, and the trend goes even higher. Okay. So this is a common breakout style trade. If you find this kind of a trade, then you can happily take the trade and you can follow the trend. There's another style of trade which could be, right, which could be the trade on the basis of momentum, trade on the basis of seeing how the sector is behaving altogether. So if the sector like steel sector, this is a chart on which I've shown the 5-minute chart of 4 steel stocks. When they are moving together, there's momentum. This means that the stronger hands are interested in the steel sector stocks. That is exactly what it means. So there are financial institutions or there are leaders who are going and buying these stocks. Okay, who are going and buying these stocks, and once they buy these stocks prices increase together. This showing me that there is some reliable interest. That means if the price is going up now, it should go up a little more further, because these interest people who are taking interest are no small hands, they're bigger hands. Now I've spoken about breakouts, I spoke about this also. Let me give you another example. Let's take a mean reversion trade, something which is reverting from the mean, reverting to the mean, or you can say a trade where we are looking for a reversal. So that means in the recent parts in this chart, the market had been going up. Okay. And we saw that the market is creating some sort of a distribution on a small time frame, and it is giving a correction from this. Okay. So we are looking for, it is not a reversal trade, it's not a very big breakout, it is just a correction, and then later market goes up. But this correction is tradable and it is big. Okay. So this is the essence. The essence that these 2-3 kind of trades, one trade could be called a retracement trade also. To save the confusion, I'm not giving too many examples. The retracements and breakouts on the basis of which you take a trade. So if I take a trade on the steel sector stock, I will look for a short-term resistance breakout. And if that could be a good entry point, it will confirm the strength of the trend. Okay. The core aspect is that despite these examples being from one stock at a time, they tend to repeat themselves. This behavior tends to repeat themselves. These are the assumptions of technical analysis. The number one, the market is discounting everything. Simple, that if all participants are there in the market, whatever they're doing, they are using their ideology or their viewpoint of the market, and it discounts everything. Okay. Second is prices move in trends. Excuse me. Prices move in trends. Okay. They don't move one-sided. They move in swings and trends. We all know that. No rocket science over there. Point number 3, market participants tend to act on emotions. And number 4, history repeats itself. So when market participants act on emotions, what does it mean? It simply means that they are not like informed traders or investors. They are acting only in times out of impulsivity. So if you see, for example, there's a sideways market. In an intraday time frame, there's a sideways market. And you see that there are a lot of people, uh, you don't see those people actually. You see that the price is going up and then it goes down, it goes up, goes down. And when this point comes, even before the breakout has happened, there are going to be people who jump and suddenly the market goes down. They think that at this point, the market is going up. But over here, the sellers are very, very strong. Because the sellers are very, very strong, they are pushing the markets back down. Markets are going back down. Okay. So at this point, whoever is buying out of impulsive behavior, emotions. They fear that if the breakout happens, I will miss this strong movement. They will think that the market is going to move in a way, sorry, move in a way which is going to be so fast that they're not going to capture it. So they want to jump here, and then the market goes down. This fear of missing out is an emotion. Okay, this is just one example. I'll give another example. The market is trending. Okay, it has broken out, it is trending, etc. The market is trending. Suppose this is a reliable breakout area. People buy, even those who are looking at it technically. But they say that on my account there's a 5-10,000 rupees profit, or 2,000 rupees profit, or 5,000 rupees profit, whatever it is. And then I see that the profit is going away. What if it becomes a loss? Let me exit the trade with having 500 rupees profit. And what happens after that? A potential of almost 20,000 profit is missed. Okay, a double of what they were getting over here. That potential is missed. Now they are trading out of emotion. This is an emotion called fear. Okay, that is what many people do. So it's fear of missing out, or fear like this, or it could be some sort of greed. It could be some sort of greed. Greed and fear, I feel, are just two sides of the same coin. Greed is only the fear that I don't have enough. Okay, everybody with me on this? Raise your hands if you're with me on this. Okay, if you have any questions, you can ask. Sooner or later, I will answer. Perfect. Now, thank you so much. Now, when we see this phenomena happen again and again and again and again, they tend to make behavioral patterns. Our job is not to change the world over here right now. That, I mean, to some extent, it's my job, but not your job. Right now, we are not here to understand how to change the masses' thinking. We're here to understand how to change our own thinking. And we're not going to make it to our intellectual amusement, but to our understanding, to own that thinking, to apply that thinking, and to become more evolved. Once you become more evolved, the way you behave changes, and the way you behave changes. Eventually, that reflects upon your trading, and that creates results. There is no magic. It's simply a logical understanding of your behavioral pattern. Now what has happened is that each one of these mistakes has not been made by one person one time. One person can make each one of those mistakes a number of times. So the next time they see a resistance and they want to not miss the trade, and then they see some movement over here, they jump, and what happens? It goes down. At this point, the market comes again after 3 days later. Something like this happens in some other market, in some other stock, 10 days later. They see themselves repeat their behavior pattern again and again and again and again. Because this behavior pattern has become subconscious. They are not doing it out of themselves, their own decisions, objective decisions, they are doing it out of uncontrolled addiction or uncontrolled behavior. Now, how do professional traders manage? They're traders who make substantial and reliable sums of income. And they know the same things which other people know, the ones who are not making money. Both these parties know the same thing. What is the approach which is different? Okay, let's understand the approach which is different. The novice trader generally goes to see magic videos on YouTube. I call these videos magic videos because will be some person who will show you, see this indicator, it will touch here, it will do that, it will do that, it will goes down, it will do that, then price will also move accordingly, and people become, oh my god, this is so magical. And then they will say, let me probably buy a product or some scanner or indicator or some sort of shortcut methods course from this guy, some 2-hour workshop or something like that. These are magic videos. They tend to watch these things and immediately they will open the chart and put that indicator, and I will and they will do what? Try to the next day or the next day find out when the market is moving and doing something like that. They want to look for shortcuts all the time, and they also look for short strategy. They look for things which can never make a loss. Never make a loss. All the content, for example, on YouTube, 80% of it is watched by people who never want to make a loss. They don't accept the fact, right? Okay, also, yes, this one also somebody messaged me. Take tips and pay for tips because they are some sort of shortcut. If I take somebody else's this thing, I think I can rely on it. You have to understand the other person is also a human being. He or she is not controlling the market. They're just controlling their analysis. And that is what you have to do. And the more understanding of this you will have, you will be able to make your own strategy and have conviction in what you have viewed at the market as. One more problem is to buy inexpensive option to trade. In the beginning of the month, they will buy some far option. Even if they are right, they don't make so much money. At the end of the month, they'll buy an option which is not that far. But the point is, at the end of the month, a little bit of theta decay will take away or erode a lot of option value. Unless there is momentum, they will not make money. This is also a problem. To go from small to big in a single trade, this sort of ideology. There's recommendations, looking for them online continuously. If the market is not ready to move, early in the morning, I know some people who look at least 20 different technical reports and end up still losing money. Okay. Now they will look at these technical reports and the whole day market is sideways. What are they going to get out of this? They're going to go to Twitter, Telegram, whatnot. What are they going to get out of this? Nothing. Novice traders are lost in this loop, and then they will do everything again and again, and deep within they're telling themselves, I'm not ready to change. You see, the inputs are constant, the inputs are the same, and they're expecting change outside of those inputs. How can an output change if your inputs are the same? One more famous thing they will do is they will complain that they will find a friend and they will complain, अरे आज तो मार्केट ने बुद्धू बना दिया, आज तो मार्केट ने डैश बना दिया, आज तो ऐसा हो गया, ये तो ऐसे ही होता है, वो तो वैसे ही होता है, क्या करें क्या करें. They will talk with people and they will complain continuously, crib. And believe me, another person who, with due respect, may have been sad or depressed may not be able to help you if you both do the same thing together. Getting the point. You will also not be able to help the other person. So please understand, it's okay to have problems, seek solutions. It's okay to open up. But to crib with the same thing and looking for opportunities to crib again and again can be a problem. Okay. Because these are the habits that hold you subconsciously. Now, professional traders are different. They say that I'm going to learn with discipline and in details. So whatever they get into, they go into it with details. When I was doing my chartered market technician, I remember the time some young analysts were new and who were doing or were in one level below with me in the course, and they were doing something on candlesticks. I sat with them and explained them some concepts around it. And I realized that before coming to this course, these people had done some candlesticks, but they would never bother to get into the details. Knowing very well that every stock moves in a different way, they're looking for the same candle in the same stocks, which is very, very surprising. So unless you categorize every topic and every concept into details, you will have a problem. Professional traders always look to categorize. So if I see a particular candlestick, there are three scenarios I already have in mind. Only then I will take a trade if one of those scenarios take. Besides that, anything else happen in those candlestick, I will not trade. Likewise for other topics. Point number 2, to read quality material. So there are a lot of good blogs, something related to the market, something related to maybe psychology, something related to what really calls you as good quality. Okay, maybe do you develop an understanding about some concept. If you look for quality material, you'll find it. But those quality material are not 2 and 5 minute videos. They are the things which may take time. You will require some degree of tapasya. Like you're sitting here right now. You're sitting here for 1.5 hours at least. You require to do this kind of thing. This is the time you need to give in order to absorb any material that is a quality material. Okay. Point number 3, I will take trades fearlessly. Okay, and I will measure the risk. Now, what happens is that instead of looking for cheap options or inexpensive options or low risk and high reward trades, small stop losses, the professional traders say I will trade less, कम trade चलेगा, but अच्छा चाहिए. अगर अच्छा trade होगा, I am ready to take the risk. Of course, I will measure the risk, but I am ready to take the risk. Next point is I will use my individual view. I don't need to see 1,000 places. If I'm clear market is going up, I'm in the trade, I will see somebody else's impulsive recommendation, I'll exit the trade. No point doing that. Next is I don't need to discuss markets or search for ideas. Now it can be good to discuss things objectively, maybe some variables, but it is not good to discuss and search just for the heck of it. Okay. Next point is I am willing to do anything for change. When I asked this question, I really wanted you to mean it. If you're really willing to do anything to change, because those who change eventually are those people who are willing to do anything to change. They're willing to give up their comforts, their days and nights to studies, and their proper execution time to discipline. Those who are ready to change are really into that. And I'm sure that each one of you, whoever has whatever type of problem, somebody has major mistakes in trading, somebody has some minor things to improve, somebody is already doing well, has come here to, completely refurbish and recap their knowledge, look for things which they didn't know were there inside them. Everybody here is to do something, but there is one problem, and this is the problem, that we as human beings have a brain. As much as a brain and a mind is gifted us to innovate, has gifted us to find out new things, invent, develop, our minds have also set us up for situations which are dangerous. Sorry, for to fear those situations which are dangerous. Our minds have an emotional part which overwhelms the logical part. Now that completely, this is one reason, of course, but there could be these opposite emotions which are always going on in the mind. I'm not going to use the word brain, I'm going to use the word mind. And I'm saying that to a normal human being, whoever is watching this, probably something like this is something scary. Okay, I don't want this. I don't want this. I don't like this in myself. I don't like this in other people. Even if I feel reckless, I don't do it out of liking for it. If I feel lack of self-worth, I don't do it because I like it. These are just thoughts, and these are thought processes which keep coming and going in my mind. This is bad. This is bad. And this is good. Sometimes I do this because I like it. Sometimes I do it because I read something nice. I discover and I have some learning perspective. I have confidence. I have calmness. I'm composed. I have gratitude. I have joy and feelings of abundance. I love these things. These are happy feelings, right? Somebody will say, any normal person would say, this is sad, this is happy. And I'm saying that all of it, each one of these, all of this is in the mind. This or this does not make any difference unless your subconscious pattern does not change. If you try to come from this to this, might as well do that. But the relief you will feel is temporary. Instead of having lack of self-worth, you can have a lot of gratitude. Instead of fear of the short term, you can have a bigger picture thinking. It will always affect you positively to move from here to here. But the problem is, both these are parts of the same emotional mind, and no change, no change can happen until you have the subconscious. उसको जड़ से नहीं change किया है तो. I'm sure each one of you have read these terms before in front of you. Each one of you have tried to think positively at times. Each one of you have tried to feel that, okay, what are the emotional nature inside me which is by default and can be changed. Each one of you have done that, but the problem is, and the reason why we're here today is we have to understand that unless the mind, the subconscious level, जड़ों से आपने problem को ठीक नहीं किया है, your patterns of trading you have not improved, not changed, the problem will persist no matter how positively or how negatively you think. Your mind is something which you cannot control. That is the very nature. Okay. The nature of the human mind is we are fearing some sort of uncertainty. Okay. We are having concepts. One concept which we have is around the concept of money. So if you see something outside of you, the moment you see something, hear something, taste something, you react to it. It will create some sort of emotion or some sort of mental hindrance. Somebody who is a pet lover might see a little dog or cat and say, oh wow, such a cute little animal. The moment they see something, they saw they felt that. They see someone behaving badly. The moment the senses meet the nerves in the brain, something or the other is felt. So the mind is often not in control. Similarly, when we have concepts around us, your opinions around something, there's something you constantly feel. And we all have a concept around money. Now we are going to look at things which we can control. The nature of the mind is such that a same topic, okay? There will be, oh my God, suppose you have a friend, he or she behaves badly with you. And you say, oh my God, such a bad friend, such a bad fellow, such a selfish person. 2 days later, somebody feels the same friend behaves nicely with you. Your mind will say, oh, what a lovely person, I'm lucky to have a friend. So all this is in the mind. And similarly, our concept of money is in the mind. This is the nature of human mind. That we, first of all, we have a connection or some sort of association. The moment we hear something, the moment we touch something, smell something, taste something. For example, when I'm talking right now, maybe someone you have heard with a similar voice, and you recall, oh, this guy sounds like this person. You see, there's an association which is created immediately. So same way, when you are looking at the markets, be it a move which is giving you some sort of pattern which you have seen earlier, the last time you saw it, you made a lot of money on it. You're seeing it now in some other time in other stock, maybe in a different market phase altogether. But your mind is going to race in associating with that past immediately. There is no doubt about it. So our minds are wired to associate everything. Number two is we fear uncertainty. There's some sort of that caveman thinking we still have, where if something is in front of us which is dangerous, it is a fight or flight response. Okay, and because these associations are present, what happens is that as we grow up, it causes more and more and more association to build up. When you were a child and when you're doing now, whatever you're doing in your life right now, compared to when you were a child, you're a much more experienced person, much more smart person. But if the child has a higher capability to do and sit learning of some sort or solve some maths problems than you have, it is simply because you're completely distracted by these mental associations. This subconscious garbage which is accumulated is making one associate and think all the time. And that is why most people say, I'm tired of thinking, I'm thinking too much. This is a problem in your trading, you will ask. Yes, it is. Because the moment you take a trade and you want to sit through the trade and there's a small correction, you associate with the time when there was a strong downfall. And you see that, okay, a red color candle is present after going up. That means I saw this red color candle the last time market reversed. But then it again goes up. And by now you're exited the trade. Mental association. Are you all with me on this? Raise your hand if you're with me on this. Our minds are wired to associate. As simple as that. Okay. Second is we fear uncertainty. We don't like uncertainty. Nobody likes uncertainty. We like sure things. Most people like a sure, most parents like their children to have a sure fixed income business, and not a business, a fixed income job. Because a business might mean that the income revenue is a little uncertain. Exactly how much when is uncertain. We like certainty and we hate uncertainty. We don't like it in people, we don't like it in careers, we don't like it in places. Certainty is something we are more fond of. But the truth is that nothing is ever certain. And therefore, what happens is every time we have some sort of a problem in our life, it is only because we thought this was certain and it is not certain. In essence, everything was uncertain. And our capability to deal with the things which are uncertain was something which would have helped us. The reason why, particularly our generation, is having and going to have more problems given the state of affairs is because we are full of comforts everywhere. Everything is seemingly so certain. You have a go-to place for everything. You have at the beck and call, you can have a Google search about anything you like. And how much of this freedom is properly utilized, nobody knows. But the truth is that we have taken everything for granted. Therefore, the person who is getting a 90 plus all their lives, in school life, they're getting more than 90 out of 100, suddenly comes to college. And this happened with me also. I'm like, I'm not saying I got 90 plus all my life, but once in college, I got 60. First time I saw 60 in a long time. I felt, oh my God, what a problem. And dealing with this sort of feeling is like dealing with failure or dealing with some sort of loss, can be extremely painful. The only way is to evolve yourself to a level where the small things and the big things starts become equanimity. So if there are small problems, you'll be able to deal with it. If there are big problems, you'll be able to deal with it. And when you have the power to deal with a certain degree of uncertainty, it will give you the confidence to go ahead. It will give the confidence to go ahead. It can give you the confidence on trade by trade basis, as well as it can give you the confidence on the basis of trading overall. And this will take you out because this fear of uncertainty plus this association creates this, you have this index in your brain. Each one of us has this index in their brain of all the past events that happened, all the hopes that were broken, etc., etc. And this entire directory, this historically organized, that keeps our mind outside of probability and want to just stick to certainty. Okay. Point number 3, very important. Many people tell me, sir, somebody called me just about a week back. Sir, I want to take up your course. I'm like, okay, very nice. Out of curiosity, I just asked the person, how long has it been you're trading the market? Like, sir, I'm trading on the market from the last 15 years. I've got 15 years of experience in trading. And okay, how has it been? So I was also very curious to know. 15 years I've been a loss only all the time. So I like, how is this experience helpful to this person? If the person has got the experience to walk on pointy thorns and is walking up and down and up and down and up and down on those thorns, then how is that experience actually very beneficial to the person? The person has permanently created certain behavioral patterns that have lasted for so long and the person is not getting out of it. You see my point? We practice, whatever we practice becomes permanent. And the person's habit in this case caused him to become a permanent in his behavioral pattern. Of course, we had a good conversation. I helped him with certain things. And he wanted to take up my course, which is about technical analysis, but it has a little bit of psychology also in it. But the key point is that if you have such a situation where you see that I'm doing something, my inputs are the same, how can I expect other output? And if I change my habits of input, that will only happen if I control my mind. It can be seen in any case. Somebody is addicted to something. If they have control on their mind, they will control their addiction. Somebody is emotional about something. If they have control in their mind, they will not be in unhealthy emotions. Somebody is overexcited about something. If they can control their mind, they will not be overexcited without any reason all the time. You see how much control we have on our mind is the control which we can extend to our habits and therefore change the habits. But to have the control on the mind is not an easy job. It requires us to become equanimous. It requires us to be in a certain meditative state where we can take things as neutral, not as relaxed, not as joyful, or not as overly happy. I'm saying neutral. Neutral means as it is. And that is the start to actually understand that the subconscious patterns of behavior we have developed really never existed. It is coming out of the lack of control on our mind. The more people evolve, the more successful they tend to become. Is it not so? And being evolved does not mean winning all the time. It means being able to take the losing times and still being okay with it. Failing and feeling well. It does not mean winning well every time. Now, if you have such a mind which has got so it's like a pitch, a cricket pitch, where you can have a good batsman, and no matter how the ball comes, you're the batsman and you can hit every ball properly. In some cases, probably just defend yourself. If your mind is like that, then you have an edge, a psychological edge, which professional traders have. But if your mind is not like that, then you're not in control and you can do anything. It will not help you. Right? You can do anything you like, it will not help. It only matters as to how evolved you are. Unless you become evolved, this success is not possible. What the brain does is, the brain is a physical thing, it's a physical organ, right? The mind, nobody, not even the doctors or scientists or the oldest of the sages, nobody has ever been able to define exactly what the mind is. The mind is a flow of thoughts, for example. That's the simplest definition of it. It's a flow of thoughts. Obviously, the brain helps us understand the world around us. And whatever we experience, we build concepts around that. Now, you will see that some people say that these are the rich people and these are the not so rich people. We speak in society in terms like that, the rich and not so rich. Okay, it's because somebody who is rich has adapted their brains from a starting point. Somebody may have been born with a silver spoon or a golden spoon in their mouth. They have adapted to the environment they have seen. Whatever they are seeing, interpreting, becomes a reality. Slowly, slowly, when they meet other people also who may have not been born with a silver spoon, they see that and they say, okay, fine, this is the other person's reality. It's very different from my reality. And the other person also says, okay, this person is a rich person. His reality is very different from my reality. The brain is a physical organ. The mind is a flow of thoughts. And together, or through whatever you have adapted yourself with, whatever you have seen in life, this includes every topic, including your trading behavior. You have adapted to that. And this historical directory which you maintain in your brain, that becomes your comfort zone. And when there's something which is already adapted, where something already wants to stay in its comfort zone, it is practically impossible. It is practically impossible to make that comfortable survival based mindset into a probability based mindset. Why do I say survival based mindset? So you see, why do I say survival based mindset? Why do I say survival based mindset? Because what do you survive? You want to survive those things which you think are a part of you, are a part of what you have adapted, are a part of your reality. So you see, a lot of people say, probably if a person has got a lot of money, they're going to be more big risk taker. So when I will have money, when I will have big capital, I will be able to trade fearlessly. I don't have capital so much right now. That is an issue. And let me tell you one thing. There are a lot of people who are very rich. They're even more scared of losing their money because it's a part of their identity, and that identity wants to survive. The more the money, there is a high tendency for the person to not change careers or not take those leaps, although the person has got bigger resources to do that. There are many businessmen who actually don't want their business anymore, but they are running them because they just have to run them. They have all the resources, but they will not take it. Even if they find interest in trading, they will not change. They will not change their path because there is some fear attached. So don't think that your reality of money is the only reality of money. And it's not also that just two categories like very rich and not so rich. The whole thing is that our reality of money is based on the way we approach. The way we approach money. And we think the only ways we approach money is earning, spending, investing, saving. No, that's not the only way we approach money. We approach money emotionally also. And obviously, after approaching it emotionally, one is not neutral enough. One is not neutral enough. So what the problem is that the moment they earn, they're looking for ways to spend because there's some emotion attached with earning and spending. It's not just that I will do this work and I will earn so much money, or I will spend so much money because I want this experience or I want to buy this asset. No, there's emotion involved there. So when you are going to trade, and the logic about trading is what? I want to find a good strategy. I want to see if the market is ready to move in my direction. I want to jump and trade. When the opportunity is there, I want to take the opportunity. If these three things are in line, I will make a profit. If it's a high probability trade, I have a higher chance of making a profit. Of course, I can have a stop loss also, no problem. Next time I'll find a high probability. This is the logic. This is how you should approach at least the earning part in the markets. But what is your mind associated with? Emotions. If that is mind emotionally associated, it is not in control. What will happen? You will go there and you will start thinking, yesterday I went to this place, I spent 5,000 rupees, and now I have to make up that money. Or somebody might think, oh wow, I made 20,000 rupees in the morning. Such a good day, such a great day. I'm sure I will do something and make more money. Let me overtrade. You see, the logic is missing, and the entire emotional value of earning, spending, feeling good, feeling bad, all that is taking its place. If you feel good and extra extreme good, you're bound to feel as opposite. It is law of nature. Now, a lot of people, when I'm going to say these things, a lot of people will feel some sort of resistance in their mind. They will see, oh my God, why is he talking about such horrible things? I thought I will feel good today. How many of you are thinking like that? Can raise their hands. There will be some people who will have this inner resistance. Somewhat. Some of you will have this inner resistance, right? Thank you, Amarji. Thank you. That was a very honest raising your hand up. And two, three other people also raised their hand up. Yeah. There's inner resistance. Because you don't want to be neutral. You want to always be in emotions. You want to be, oh my God, wow, I made so much money, I'm feeling so happy. Or I lost money, I'm feeling unhappy. You're continuously wanting to be that. You want that चस्का. आपको लाइफ में वो कंटिन्यूअस चस्का चाहिए. और उस चस्के के वजह से जब अपॉर्चुनिटी नहीं भी होती है, then also you go and overtrade. Getting the point? When there is a loose market and sideways market, a dull market, then also going and trading has a problem, right? Getting the point? They are having some messages. There was a question which came some time back. Shivamji says, recently I have been trying to normalize losses as I normalize profits and get rid of the bias that comes in. It is tough thing to do, but I will not give up to get rid of the bias by all means. That's a very nice step. Like a casino owner, no emotion, says Vijayji. That's a very nice step, Mr. Shiva. That as good as the profits are, the losses are also just an output of your trading. These are not extreme good or extreme bad, but the need for this emotional pattern. Oh, I want to make money and feel good, or I want to lose money, at least feel bad. Otherwise, my day is not over. What happens is it erodes us. It erodes us emotionally. You see, when people get old, their faces become more and more wrinkled, the body becomes stressed, the face becomes stressed. Why does it happen to all of us as we grow older? It happens because one's mind is not free. One's mind is not free, and then the emotions have continuously jarred themselves with emotions, sparred themselves with emotions. And this market is full of people who have got a wonderful career and stream of income going on, but they still want to come, feel the chaska, or feel the hurt, the pain, and do something at the end of the day because they want to feel these things. And in the end, what is left is net profit is not so much, net loss maybe not so much also in some cases. The trading they do is not affecting their lifestyle also so much, in the sense that the impact of what their earnings from trading or losses in trading is not impacting them so much also. But in the end, what is happening is they have become addicts to emotions, addicted to trading. Okay, someone messaged, I've been through it. It drained me completely some time back. Took a break and came back, and now I've improved and become better still, but still not where I intend to be. Neutrality is the ultimate goal. Very good, Shivam. I'm very happy you're using these words and sharing your experiences with everyone. And I'm very happy that people like you are here today in this webinar. So this neutrality which he's speaking about, the equanimity which I spoke about, to get your mind to a level where you can measure like a thermometer. Like a thermometer, when you put it in your mouth, at the end of the day you see, okay, my temperature is 101 degree. मुझे बुखार हो गया. अगर आप देखते हो कि आपका टेम्परेचर 95, 96 हो गया, तो अरे my body temperature is extra cold. If you see early morning, if you wake, try and test your temperature early in the morning. Your body is much cooler, much cooler. I've seen myself 97 degrees, 9 point something also. Okay, so this is the point what I'm saying. Like a thermometer, Can you say your mind is emotionally at some place? Is it at a happy place or is it at a sad place? If it is any of these two places, it is not at the required average human temperature. If it is any of these places, it is not at the required temperature. So how do I change the temperature? How do I change the temperature and still be focused so that I can understand my rules and play out my rules in trading? I need a complete makeover. That is the requirement of the day. The complete makeover is the requirement of the day. I see some people are raising their hands up. Okay, I had one question which was earlier at the time I started the webinar. Sachinji, are you still there? Yes, you're still there. So I see your question. Let me answer this question before moving ahead. Sachinji is saying, I think already, okay, so he's saying that the problems like family relationship, etc., love or romance, etc., all these different problems he's saying uh, are surrounding him. Emotional problems are surrounding him. So how do you get rid of these? Okay. So I think to some extent you got an answer, and the further discussion you will get the answer of what I'm saying. Okay. If you want to add to this question, you can, and I'll get back to you. If anyone has any question, anybody over here, feel welcome to ask. Not an issue. Please feel welcome to ask. Now, where do traders get caught? Continuing. Where do traders get caught? Continuing from this point, that you already, at some basic level, each one of you have a reality of money. Before you saw the market, you had some reality of money. Some of that reality for some people was, अरे मैंने बड़ों ने कहा है, मेरे फैमिली वालों ने कहा है, मेरे अंकल ने कहा है, मेरी आंटी ने कहा है, मेरे मम्मी ने कहा है, पापा ने कहा है कि मार्केट में मत ट्रेड करो. For somebody that is the reality. मार्केट को देखना नहीं. Somebody that is the reality. सब बकवास है. For somebody, the reality is that this is a platform to make money. Business is a platform to make money. तो मन को हम अपनी रियलिटी से देखते हैं. जिसने जिस रंग का चश्मा पहना है हम उससे देखते हैं. जिसने लाल रंग का चश्मा पहना है उसको सब कुछ लाल दिखाई देता है. जिसने हरे रंग का चश्मा पहना है उसको हरा दिखाई देता है. अभी दो क्वेश्चन आए हैं मेरे पास, मैं दोनों को आंसर करूंगा. डॉक्टर अभिषेक का एक क्वेश्चन आया है, व्हाई शुड वी डू ट्रेड? वेरी वेरी गुड क्वेश्चन. If something has something in my discussion just prompted you this, why should we, has prompted this question from you, doctor? Has something in this particular webinar prompted this question from you? The question is, why should we do trading? I say, if you find the interest in markets and trading, do it. If you don't find the interest, don't do it. As simple as that. Because no matter what your reality of money is or what reality of market is, there will be challenges which are psychological to overcome. You will only be able to overcome those challenges if you are committed. And you will only be committed that if you have that interest and love for trading. And when I say interest and love, I don't mean anything emotion, passion or this or that, aggressive. I simply mean, do you like to put your logic in the right place to get something out? Most people are like, about 30-40% of the students I have are coming from science background. Okay. A lot of them from IT background also. Because they are people who may not have the finance background or commerce background, but they like to put their logic into something and benefit from it. Likewise, I have seen that a number of people, not just science professionals, but all kinds of professionals and individuals have their individual interests. I've had a few housewives and mothers who are very successful in the last few years. But that is because they are unique individuals who like to have interest in things they put in logic and get some benefit from. That's the only reason to trade. There is no other reason to trade. There's practically no other reason to trade. If somebody is trying to put too much of their creative outlet, they will have a problem. If they're putting too much passion, they will have a problem. But we don't realize this. A lot of people try to make it their passion because everything is about money over here. This is where I'm coming to this point. Most traders get caught in this web. They think money means freedom because our conditioning is like that. Money means freedom. No matter how rich you are or how not so rich you are, any amount of money that you have, something more than that means freedom to you. If I'm living in an apartment, tomorrow I have a bungalow, that is more freedom to me. If I have a bungalow, then if I have villas in two different cities, there's more freedom to me. So this freedom association with money is very general to human mind. And our conditioning is like that. We see everything in those terms. No matter how rich you are. Like 80% of the conversations you will have with your friends, or in case of relatives in social gatherings, are around money or are around who is making how much or who bought this or who bought that. You see my point? Not to deviate too much, but the truth is that everything that you think about money and feel about money has an impact on trading. And the second is supernatural wealth. So when I'm talking about your, suppose anybody over here, okay, assuming somebody over here is having some job, and from that job they have a certain income, or they have a business, and from that business or service they have a certain range of income, okay, which seems natural to them. Natural, ये मेरे लिए भाई इतना आ जाता है, or this is my salary, after cutting taxes I get this. But then the idea of supernatural wealth is stock market. Okay, stock market means that if I make 1 lakh rupees in a month, I will end up making 5 lakh rupees in a day. This is stock market, supernatural. So from the person's range, whatever is supernatural. Similarly, somebody who is having 20 lakh rupees per month income, that person will say, oh, stock market means I can make 1 crore rupees in a day. So they will think in these terms. This supernatural wealth, mental, this affects your mental skills so much that the moment you see there is a trade in front of you, you enter the trade, you're making profits and you forget to book the profits because you're always thinking about that supernatural wealth. This happens mostly with people who, number one, have seen some recent success in the market, or somebody who has suffered some traumatic loss in the market. They will not book profits easily. Believe me, every year I take a few people who uh, come to me for the something called personal mentorship. Very few people, but I give them 6 months. You see, what I've learned, and from more than 400 students who I've taught, what I've learned is how people think. And this is a very common denominator I see, that anybody who has got a traumatic loss in the recent past, or anybody who has got recent new success in the market, they will have a difficult time to book profits. Agree or disagree? If you agree, raise your hands. I see few of you are also distracted. You're not looking at my screen. Looking at something else, I guess. Good. Correct. Good. Good. So a lot of you agree. So this common mistake is just come from a set of the common mistakes most people make in trading. Now, my obsession with you is not to go into अरे ये इमोशन हो जाता है, अरे दुख होता है, दुख ही सब कुछ है, सब माया है. No, not like that. I'm not here to make you feel good. I'm here to make you understand that in order to really change, you need to do some reality checks. Those people who do reality checks end up getting success. And those people who want to stay in the fantasy, they keep themselves in that old behavioral pattern. Okay. Now, what are the common mistakes one trader makes, a typical trader makes? Taking impulsive decisions. I've always mentioned this old example of mine that some of the common mistakes trader makes are like akin to two animals. And this example I've given quite a few places also, if you see my YouTube, etc. That many traders are behaving either like a dog or a donkey. So if you have seen a dog who is trying to cross the road, they're very impulsive in their behavior. Kabhi aage, kabhi piche, kabhi aage, and then there is an accident doing all that. Whereas a donkey will do what? वो रास्ते के बीच में आएगा और वो एक ट्रेड के लिए गधा बन जाएगा. So not booking profits is behaving like a donkey, and taking impulsive trades is behaving like a dog. And many of us have made these mistakes. Okay, Sachinji, the first question I will answer. The next question is that anxiety makes to take impulsive trades and reach more freedom and solve these problems. Yeah, that is true. One is very anxious with their current situation. We'll come to these things. See, this is a very deep topic. The people who are willing to learn the truths about themselves are going to listen. Okay. And each one of them has these connections. Being somebody who is a mentor, these things I have objectively seen. The moment there is some sort of a sense which is interacting, if your eyes, ears, nose, anything, smell, touch, taste, whatever, that sense is created with some outside object, there has to be some sort of conclusion. But to the neutral mind, that conclusion will not be there. If you see a profit on the screen, there's an immediate conclusion. There are lots of people who are doing that. They will show you some sort of profit to convince you. Because the moment you see a profit, immediately your mind says, oh my God, I think this person knows what he's doing. Then immediately you see a loss, you say, Arey Baba, this person is a fool. Most of the things in the world are sold to you like that also. Okay? So be careful. The whole point is to become neutral and control your mind. Okay? Pratik ji is saying booking profits is hard and booking loss is easy because impulsive thinking and overtrading. Booking loss can be easy or hard, or booking profits also can be hard. Because often booking profits, people have attached too many expectations. It's too many expectations. And the same reason, when there are expectations, you can't book loss. Because you feel like abhi ulta ho jayega, change ho jayega, maybe my stop loss was wrong, or maybe I can afford to lose a little bit more because yesterday I made a profit. No, 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 not that. If you connect with your yesterday you made a profit, you're going to always make a loss in the next day. If you connect too much with the yesterday you make a profit. You have to be completely in the moment and understand that it is not about yesterday you made a profit. Anjuji is saying I book profit very fast and don't book losses. So don't book losses is something which is the common with a lot of people, and it's obviously nothing to be proud of course, and it's something which one needs to work on. What is anybody in the market doing other than their rule? Is because at some degree they're not trusting the ability to understand the stop loss. If the rule is to take a stop loss and you have decided this is the stop loss on an analytical basis, the rule is that you should take a stop loss. But if you trust yourself, only then you will do it. So coming back to, I will come back to this slide again, but these are three most important points, where the three factors which control your clarity of thought, your actions in trading. And this is some content from one of the books which I'm writing. Okay. One is analytical robustness. Only if you trust the fact that this is my analysis, I know what I'm doing, I know how the market behaves, and I feel that this basic understanding or overview of understanding is okay with me. I'm okay and at peace with that. That is robustness and analysis, right? The second is your reality of money, as we just discussed in detail. And the third is your confidence as a trader. This is my photo, by the way, in case you ask. So if these three are put together, they form the basic pillar, okay? Form the basic pillar of you controlling your mind in trading. Anjuji also says that her not booking losses were making her depressed and continuing to more losses, and have decided to change from yesterday. I have changed after learning the hard way. Okay, that's a good thing if you have mentally completely made up your mind that I decide that I'm going to change and no more of this, no more of nonsense habit or impulsive actions or whatever, no more of tolerance with any impulsive behavior or any habit that seems nonsensical to me. If you make up your mind, that's the way to go about it. Now, if you find that any one of you over here has got any of these or most of these factors impacting your behavior, you know that this could be one of the key components to hold your subconscious pattern. Some people have a key component which can be just this much and they can affect their entire trading no matter how good they are. They are very good, but it is affecting their entire trading because they're correlating money and trading from markets, money and trading income from markets. Okay, I have a question. It was a little long question, so I'll just break it down into a small thing and read it out to you. Sachinji says that it's like a rat race. All the freedom for the money is creating some problem, and whether I'm willing or unwilling, the anxiety, the emotions, and the risk which is around there finally ends up lowering the freedom. In reality, actually increasing the pressure. Just how to get rid of this and be calm and while in the market, just to lock it in for a while and not thinking problem, these solutions perform on the basis. That is why exactly what I want to know. Okay, fine, I'll come to your it's quite a long question. I'll come to this. If anyone else also has any questions, feel free. I'm going to come to one of the deepest parts of this webinar today just now. Yeah, so if anyone has any question, feel free. If you have any of these things, okay, somebody can just correlate time and money too much. So they think that I'm going to make so much profit in so much time, and doesn't work out for them, causing them to have those difficult behaviors come up. Or somebody can have just this one problem, that the moment they start regretting, the state of mind becomes completely negative. The moment you have any of these, excuse me, at the moment you realize that you have any of these thought or behavioral patterns, you will not be able to be consistent. Our goal is what? Not to make money on a single trade, but on a series of trade come out as net profits. Many people have a problem that when they make profit, they don't preserve their profit, they don't have any consistency, and therefore they end up overtrading. They are most emotional after booking their profit, and they don't even realize that they are most emotional after the profit. So these are problems which need solutions. The solutions could be, number one, objectivity. Pure objectivity in ideas. The moment your mind is such a place where you're not thinking about fantasy while looking at the chart. Many people look at the chart, but their thinking is very imaginative. It does not work. Trade less, but trade good. Taking only high probability trade makes a difference. Only high probability trade. That's all I need. I don't need anything except for just high probability trades. If I get 1 or 2 trades a week, I'm completely fine. Yes, I will be looking at markets. I will give time to markets. But if I don't give so much time to markets, I still get even 1 trade in a week. That is also fine. I can track the markets as if tracking the markets is my hobby and trade only when it is required. Less is more in case of trading. Do less but do good. When you book profits, do you bury the trade? Or do you keep thinking, oh, I made so much money, let me take some more trades? Or I missed so much, this trade I could have held on for longer. Do you bury the trade after taking a profit? If you don't know how big an impact it has on your trading in the long run. I know one of my students, he scaled up his trading. So earlier when he was making some profit, when he started off, it was some 5,000 rupees, 10,000 rupees on a trade. Later on, when he scaled up his trading, he made profits, he became consistent. There was a time when he made about 1 lakh rupees in a trade, was normal for him. But then when he would, one problem he started getting was, he would book 1 lakh. Now because the scale was higher, if the profit moved even higher after he booked the profits, if the trade moved even higher or lower depending on his direction, he would start regretting. He would say, oh, I could have made 50,000 rupees more. 50,000 is such a big number. When he used to make 10,000 rupees, he never thought, oh, I can make 2,000, 3,000, 5,000 more. But the numbers got big. His regret size got big. He was not able to bury the trade. So we had to identify the problem and work on it. That's what he did. Turns out, the moment he solved the problem, he was able to scale out profits and was in complete peace after the trade was taken. Next point is to learn if you need to. Okay. Where you learn from, what you learn, I don't care. Yes, if you want to connect with me and learn, you can WhatsApp on this number. This is for technically sorted. Send me a WhatsApp on this number, the official number. You will be sent the details of the course which I teach. If you feel you need a 6-month course with me one-on-one, that for that also you can. Generally, I have a course for 15 sessions, and it is a well-rounded course given to you for 2 months. Pratik ji is asking, Pratik Siddharth, another Pratik ji is asking, don't you think, sir, mentorship like program is just as a process to become a full-time trader? Yes, absolutely. That is for people who want to become a full-time trader. I take them one-on-one and work with them on all aspects of psychology as well as this. It is a more expensive course always, to be honest. So I take only a few people in the year. Right now I do have a seat for one person, but just sharing with you what I do. Second is the 15 session course, if you like, you can do first, and then later you don't need to do mentorship. There are many students. I've taught more than 400 students this course. Okay, the 15 session course, which is for 2 months. So you WhatsApp on this number, you can get the details, and you can get in touch with me to talk about the details also. Okay, but this is a form of learning, a form of structure. Many people over here can check out my YouTube channel by my name, uh, Mohak Pachisia. There are a lot of videos, and there are no magic videos. There are no magic videos. There are a lot of proper videos on aspects of trading, trading psychology, something related to maybe candlesticks, something related to the live market, something to do with the morning preparation before the market, and you can learn from there. However, the course is a more structured learning, and that structured learning is very important. However, the only the people who really want to change will go ahead to that level that will learn. Okay. Yes. Okay. Mr. Prakash is asking. I do have a personal mentorship course. It's not like that. It's one-on-one, but there can be a group mentorship course if there are 4 people at least. So I'm not going to talk so much about the details. You can connect with me on this number. In the details will be told to you, so that I can pay more attention to the topic of the webinar today. Okay. But all in all, the 15 session course is enough to make you a full-time trader. Obviously, there are a lot of reading material, etc. also suggested. And obviously, when you have done the course, you will be in a group called the Inner Circle group, which is constituting of all my ex-students, all my past students who keep in touch with me. Sometimes we have meetings where I solve their doubts or meet them regularly, time to time. So that is the thing. There are discussions which are more objective in our group. We have made the Telegram group now. Earlier it was a WhatsApp group because the group was becoming bigger. Right. So learn, absorb, do anything that's needed to be done. Do it from proper places. Do it from proper things. Don't go for magic videos, please. Okay. When I go into a topic, I really go into a topic. So you can see the details of my course on www.technicallysorted.com also. Okay. Practicing what is right. Practicing what is right and getting the right experience will make the habit permanent. So making the habit permanent is our goal. The correct habit should be made permanent. That is our goal. Okay. If you do these things, trust me, you will become a much better trader. Before I cover the last and the most important point and show you a way how to actually control your mind and look at things from a very neutral perspective. Very neutral perspective. Before I do that, some people who had asked one last time, if you really want to know more, go to www.technicallysorted.com. Okay, and if you want to check out how the old students feel about the course, you can go to the testimonials section, and those amongst the hundreds of students who have done the 15 session course, some of them have the testimonials here. I've also been this thing by Money Control, have been covered in an interview by Money Control. If you have the Money Control Pro app on trading psychology, a lot of gyan is given on that. Okay, so now coming back to the webinar presentation. So what we need to learn is how to control our mind and build a neutrality, a certain kind of confidence with our trade. Correct? A lot of people, a lot of wisdom givers in the world, teachers, sages, saints, and who all not, have always propagated the idea I want you to close your eyes and listen to what I'm saying. Everybody has propagated the idea of controlling their mind, controlling their behavior, of having some sort of a victory over themselves, over themselves. All the religions in the world and the faiths in the world are also based on such kind of learnings. The problem is that we have forgotten the learnings and we have got swayed into the festivities. I'm not talking from a religious or a saintly perspective. I'm talking from a reality perspective. The reality is that whatever we think maybe God, superpower, this or that, somebody may call it higher dimension, universe, whatever. What we think is just an output of natural phenomena. What happens to our body and mind is an output of natural phenomena. If I think and sort of a ill will or sort of some ill feelings about someone, or I try to judge someone, there will be reactions on my body, in my mind, in my brain. If I appreciate someone, there will be certain reactions. If I empathize with someone, there will be certain reactions. This is very human. The moment today or 10,000 years back, anybody will feel anxiety or stress about money, they will feel reactions. The moment they feel worried about money, they feel greed, there will be reactions. And these reactions may not be physical reactions all the time, but they will be reactions in terms of confusion. The moment one will think about supernatural income, there will be confusion. It will be no matter what. The moment one attaches themselves to supernatural income. See, I have got big opportunities in the market too. It is not like that. Everybody will get big opportunities if you stay at the game. But when they happen, you will get it. Not in a loosey-poosey sideways market, perhaps, but not out of imagination. So unless and until something is seen as a high probability, big size trade, there is no scope of supernatural income. And even if you take those trades, your position needs to be measured. You need to hold on to the trend as long as the trend is going on, etc. These factors are very important to be understood. Once understood, once understanding yourself is there, once understanding your reality is there, once controlling your emotions is there, then the confidence that will come out will be a sort of silent and neutral confidence. Okay. Now, a lot of people say that we should meditate. Yes, you should. But when you do so, don't do it just because you want something or some sort of wishful thinking or some sort of expectation, because that will create more reactions in your body and mind, which will confuse you even further. If you want to, then you completely be in neutrality. Now, quietly and silently, why don't you just spend 5 minutes? And if you could do that for at least an hour every day after you wake up, your life will change. The next webinar or something I'm going to have is going to be a guided meditation where I will be able to take you through the entire process and make you have one meditation setting with greatly improving how you are going to live life and not just trade. When there is more objectivity in your life, it will eventually reflect on your trading. The reason why I don't want to connect is because the moment I will say this is a guided meditation for traders, the natural tendency is that it will help me in trading. The moment your desires will come up. When there is some sort of desire, the natural reaction to the body, it's nature's law. The desire means that something in the now is giving you discomfort. That is why there's a new desire. Now see, the desires or objectives or goals are not bad. I'm not saying that. I'm just saying that what are you going to do about it? Can you look at your desire objectively? Can you look at your goal objectively? And if you start doing that with the small things, it will reflect on the big things. Okay. We call it a day right now. Given you a certain aspect of what is needed to be done, or what is the nature of mind is. Next time, probably next Saturday, if possible, or before or after, I could have a session where I teach some sort of, I would not say a particular method of meditation, but something which I have made students do and done myself, and which has worked to become more neutral, more clear, more objective, more patient. Okay. If you want to get in touch, you can send a WhatsApp or actually call on that number also. Okay. That will be the thing. Sachinji, can you repeat which question you want answer for? Anjuji is saying thank you so much for the inspiring and motivating session. Thank you so much, Anjuji, for always supporting and being in such webinars or initiatives, being a part of it. How do you lock the new set of behavior patterns? Sachinji is asking. Well, you don't lock anything. What you do is you unlock what is set, what is old. The moment you try to lock a new behavior pattern, you will start getting attached with that, and it will, in another market phase, perhaps not work for you. So the whole key is to unlock, and nothing is to lock. The freedom which you're seeking in the market starts with the freedom you have to seek in your mind. Are you getting the point? Shivamji is saying, thank you for the session. Thank you, Narendraji. Thank you, Shivan. Thank you for all the appreciation. Thank you, everybody. Have a great day. And some people who asked about any of my programs, you can just message me over here. Thank you, Sachinji. Session has helped a lot. Dr. Abhishek Tiwari ji is saying very good session, right thinking. Thanks a lot. Thank you so much. Thank you so much, doctor. Thank you all. Please take care. Have fun and keep learning. You can visit my YouTube channel. Go to www.technicallysorted.com. Have fun. Thank you so much, Pratik ji. Always good one. Thank you so much. Thank you, Rahul Guge ji. Thank you, Anand Patil ji. Well, thank you all. It was a lovely Saturday morning. What a great start to a weekend. And it's a long weekend. So it's a great start to a weekend for all those who have come and for myself. Take care, everyone. Goodbye. Thank you so much. And enjoy. Thank you, Jayant. Super Saturday to you too. Thank you so much. Take care. Goodbye. Enjoy.